Next on the box stage, we explore data everywhere, and how harnessing data can ensure that you stay ahead of the game. To tell us more, we are joined by Chief Revenue Officer of Qover, Parker Crockford. Please welcome Parker to the stage.
And hand down.
Thank you very much. Very generous.
All right. Hi, everyone. As she mentioned, my name is Parker Crockford. I'm the CRO here at Qover. Give you just a bit of context. We are a embedded insurance orchestration platform based here in Europe. Minus the sort of American accent, I have been American lost abroad for far too many years. Based out of Barcelona, I've been working in the European tech scene for 15 plus years. I was told today you're supposed to do just the plus after the 15, and that makes you feel more credible and less old. So hopefully that works for the room. Before we get started, first, can we please make this as interactive as possible? I've seen a lot of these sessions have had like multiple people on stage and they can bounce off each other. And so making it a conversation sooner will work better for me. Otherwise, me talking for 45 minutes could get tedious. Second thing is, just from a show of hands, how many people are from insurance, no insurance, or interested in pulling insurance into their platform? So 2 people, no insurance, 3. Okay, so we're working with more of a basic level knowledge of sort of pushing insurance into a financial workflow. Is that a fair assumption for the room? Okay, I think that works. So look, we're a scale up. We're working with companies in the space like Deliveroo, Revolut, Moniz, Kanto. We do a lot of motor insurance, which is something very different. But what we've built and where we're going is, in essence, a digital distribution agnostic platform that is risk carrier agnostic and product and geography agnostic, which gives advantages that we could be anything and everything to everyone, but at the same point in time, it's a challenge because we don't always have a full fixed product, and we're working with a lot of companies that are launching insurance for the first time or looking at how do they deploy insurance into their universes. And so one of the most interesting things I've seen, we were here last year at Money20, and the transition we've had over the last 12 months is a lot of companies we work with used to have growth strategies, and I'm air quoting the growth strategy, and now they're into revenue strategies. And insurance is becoming a far more relevant piece. And a lot of the conversations we have is, are you going to go do some sort of credit lending sort of facility to earn money, or start to drive insurance, which is a known process. And so it's a really sort of interesting conversation that we dive into with our partners of what do they know, how do they know it, where do they want to go. And so the data everywhere wasn't my title, but I felt like we needed to sort of put it out there about the amount of data that is being collected on all of us at any point in time. But the interesting piece is when we talk to people in the market about what do they want to do, where they want to go, they don't actually see the data they have as being relevant to the space that they want to go to when they want to start offering insurance into the market. And so that's one of the things we try to focus in on, is helping and sort of driving and pushing our clients into that space to be able to actually harness it. Because at the end of the day, one of the key pieces here, and what you should be thinking about when it comes to insurance is just not a tax, right? Insurance is a very challenging piece, and there's a lot of insurtechs in the market. We're all trying to change, build, and drive a market into a different place, where if we look at insurance, it's a tax, and you're something that a user or a person wants when something bad has happened, and you get that regret, and or they buy the insurance, and the challenge becomes they never need it. Right, and so an interesting piece also of this conversation, when you do an embedded workflow where a company is paying for the benefit for their end users, that also becomes a very big challenge of the problem, because you're going to pay this premium out to a risk carrier. to have your users cover and have a benefit. But if those users aren't using the service, aren't aware of it, don't understand it, they're not going to make claims, and your premium is not going to go to use. And so there's this idea of how to sort of drive the right sort of challenges and the right behavior into that. So it's really can be a tool and should be a tool of shifting behavior, marketing, and going into it. The other sort of challenging piece here is that, again, it's the regulatory framework that we all work with here in Europe. And so I think one of the bigger sort of challenges that we have is everyone looks at Europe and says, like I did as an American a long time ago, that insurance has to be the same way that we see financial services and payments at this stage. And I used to do, when I did identity and when I did mobile payments, when mobile payments used to be a whole theme of this conference, and we thought we were going to change the world, and it was the coolest thing on the planet, being able to enter your card details into a mobile phone, whereas now you don't enter anything anywhere and everything is cross-border payments. You used to have this wonderful sort of slide of what were all the regulations, what worked, where it worked, and how it worked. What you're seeing in Europe is at the beginning stage of the direction of travel that we're going to go, where they're trying to bring in the appropriate regulations to be able to do freedom of service and passport across Europe to give you that sort of single point of experience. But really the challenge right now is a lot of that regulation is still pinned to supporting a face-to-face insurance selling program. So when I joined Qover 18 months ago, I wanted to have build out a SaaS team that has commission, and we actually had to go and have a legal conversation around, can a sales team at Qover actually have commission, because you can't actually provide an individual with a commission who's selling insurance, because you don't want them to incentivize to sell something bad. So there's a huge amount of user protection around that, but the shift of going from that in person, across the kitchen table, walking to a local broker, to an embedded sort of seamless experience, you're not selling a piece of insurance, you're adding something that's included in your product. And so to be able to do that in Europe at this point in time feels very simple, but at the same point in time, it is a shifting sands scenario. And so there's really two ways that you can distribute insurance. There is the embedded framework, which is a master policy agreement, where FinTech X is the policy holder, and then you're inserting users in and through that. In the UK, you used to be able to do that not regulated. Now in the UK, that's considered distributed insurance and considered it's still being finalized and move forward, but you now have to have a license to be able to do that, to distribute that insurance. On the other side of the insurance, you have transactional insurance, where someone's gonna buy a policy as an individual. And there's two ways you can do that. You can do that as a business introducer, where you hand that user off to a white labeled third party that has that experience, and think of it more as a lead gen process. Or you can do it in an ancillary product, where there's limits of what premiums can be charged. So for example, I think in Belgium it's 400 euros. If the premium's below 400 euros, anyone can sell it. Whereas in France it's 600 euros. So if the premium's below 600 euros a year, you're able to sell that in a single click transaction format, adding it in. So it gets very complex very quickly. It feels like it all should be simple, but at the end of the day, we're all trying to move it into that same sort of seamless payment experience, where you're going to be able to have a seamless insurance experience. Now, I'm going to pause just to see if anyone has any questions about that sort of section and direction of travel, or about sort of the framework of insurance. No. Everyone thinks it's crystal clear, incredible content, engaging presenter, the whole 9 yards. Okay, perfect. So look, what are the key challenges that we're seeing in how do you deploy insurance? The piece that we talk to our clients, and what I think is the most interesting piece here, is If I go back to my statement previously of I'm shifting from a growth strategy to a revenue strategy. The challenge a lot of, let's say, fintechs and to some extent financial services, and we have a conversation about the big banks, but everyone has to spend a ton of money to win their users. The CAC is incredible. And then being able to monetize a user then becomes, before was kind of like the American sort of, we'll win all the users and we'll get all these wonderful growth numbers and all this other trajectory in the market, and then we'll figure out how to monetize them later. We're in that how to monetize them later. The battle in the market now is to hold those users, to make them loyal, to stay close to them and be very, very, very sticky with them. And so the piece that we're seeing, and especially when you're putting an insurance product into your workflow to your clients, it's gotta do really sort of two things in our mind as a platform. One, it's gotta match what your users care about from your service. I'll say that again. It's got to match that where they care about. So we do a ton of surveys. We talk to them a ton because one of the challenges in the market is you're not dealing with a user base that has no insurance. They already have insurance, and technically, you can't sort of, people shouldn't be overinsured. They should go through that process. And so the question becomes when you're trying to break that user behavior and match it to the brand is what is that going to look like, and how can a piece of insurance help you differentiate in the market? So one of the examples that we have, it's one of my favorite ones, is we used to work with a company called Rewire that was bought by Remitly, thank you, where they put a benefit into their system to say, if you sent more than 200 euros in a remittance platform for that month, you had a benefit for the next month. And it was a health benefit, and sort of think about it as income protection, saying that we would pay for your further transfers because you were a loyal customer. So it drove the behavior that mattered to Rewire, and then it also stood up to what their brand is and was, which was there to help their community send money back home. That was their user base, and they really built a very interesting sort of narrative, which drove the most important piece for them, which was loyalty and engagement in the user base. Oh, thank you. Someone asked a question. Yes.
It's a bit loud. So it's Bonolos Kukune from Standard Bank. So what I'm curious about is you mentioned around monetization, but at the same time, you're dealing with a lot of competitors that are bringing new and interesting, fancy things to customers. How do you keep their attention long enough for you to monetize while new competitors are coming in?
So when it comes to competitors, you're talking about more...
So you're getting a lot of people doing personalization, getting even more specific to customers' need. And you're at a point where you've gone through the growth, so you've adopted the customer, you're trying to make money off them, and the next person is kind of, something flashy is coming onto the street, into the space.
Yeah, I mean, it's a good question from let's say our client's point of view, because I think it is the question of the moment. The thing I find most interesting about like the trajectory we are on, and if we were standing here 5 or 6 years ago, the biggest thing that everyone was trying to figure out is how to make that onboarding as seamless and easy and streamlined as possible, so that making a user switch was a very easy thing to go do, because it wasn't before. You had to go walk into a bank, you had to do all this paperwork, and now that is no longer. It's almost like we did it too well, and the banks have caught up to some extent. Now, we can talk about what's happening with the FCA, talk about what's happening in Germany with the BaFin. There's a shift of attitude towards what fintechs are going to do, and that sort of side of the market, because they went from going, oh, well, we're going to build the next Silicon Valley, and that's actually sort of now the bigger challenge of actually sort of help getting a lot of these companies to level up. And it's almost like what the banks were saying 5 years ago is true. That they're going to be around longer. Fintechs are a flash in the pan. That may be a bit of a hyperbolic statement, but it's an interesting sort of universe that we're in. The thing that when we're talking to the clients is they go for like a user or a cohort that matters to them, and it's then how do you keep them engaged in the process of that piece? Because I'll jump forward, because a lot of time what we look at from like an insurance workflow, and again, it's that idea of how do you keep them coming back and looking at it, but it has to be relevant to the brand or the use case that they're after. So, we've just launched with the ING in Belgium, and their sort of their green card sort of framework. And in doing that, we've brought a product to them that works for that user group. Right. It's so there's a whole heap of things. Let's say we take travel as an insurance product. There's a whole heap of benefits that you can put in there. Ticket cancellation, assistance, baggage. You can add in other benefits that's not insurance, but it's like lounges. It's these other different pieces, but every single one of those can be different, and different users or different cohorts have different sort of needs. And so if we go back to like what matters is that you got to know who your users are and what they care about. Yeah. There's one more.
Yes, Annette from Finterpology. I was wondering if you could expand a little bit about that. I think you're mostly B2B, but still you're talking very much about the end customers and reaching the right customers and keeping them within the brand, which is important. And you talk about surveys, which of course is a good way of gaining data.
Yep.
But also, how do you work with thicker data, like qualitative data, talking to people, understanding how they use insurance in communities and in families, and whether it might. We're working with farmers in Asia at the moment. They don't take out insurance because it's not profitable for them when they look at what they could get through informal means by way of Qover.
Yeah.
But it's difficult to understand for an insurance company. Do you ever do any kind of research like that?
So we are a B2B2C platform, right? And so we do the infrastructure to allow you to digitize and have a full lifecycle management in a digital framework. The only way that we're able to get what is relevant is we have to go past and do those qualitative surveys, and so we spend a lot of time with our partners, even ones who have mature insurance programs, to go and ask their users and go and ask them what matters. And we've actually walked away from partners where, to be honest, it didn't really fit what they thought they would need, and the users, it just didn't really match. And it's like, that's fine. Like, but the piece that we're starting to be very sort of proactive, and some days I'm weirdly surprised about, is some of the people we talk to do not have that level of understanding of their user base, which feels like, I'll go full American, like it's all about the end consumer, the customer, them, you cycle around them, you do what they want. And so we have clients that go, we know exactly what our clients want, and we know exactly what they value. Can we build an insurance product, or this is an insurance product that meets that needs? And but then there's the other sides of it. We're like, well, let's go out and we may extend a sales cycle by months, but it's better than having, because at the end of the day, we are a success-based universe from insurance as a whole. So the way that the models work is there's a commission off the premium, and if a product doesn't launch, it launches, but no one ever uses it, no one wins. And then the other side of it, which is almost the worst side of it, and we spend more time on, is in a embedded piece where the company's paying for it for their user, but then, again, I'll come back to this, then no one claims. That's almost worse than no one actually using, like the insurance product not being distributed well. because then you as a company, you're trying to give value back into your user base, and if no one's using it, that's, for us, is like the worst outcome coming out of this. And so it's like, can we be a part of a successful launch because it's relevant to the users? But then if it's relevant to the users, then there is a huge marketing piece that has to happen to make the users aware what is the benefit that they're eligible for. And then that becomes a much different, bigger conversation early. And I think some of the stuff that I talk about later in the slides is the great thing about insurance is it is a very long and sticky sort of product, but it takes 2 to 3 years to get to full value ramp. Because if I think about it, like, I'm sure we all have insurance in this room. How many people, you have your annual policies that you probably went through some broker at some point in time to get it for you personally, or even from an SMB market point of view. How do you break that user behavior to get them to come and do it through your platform? Yeah.
Sorry.
Yeah.
How did COVID impact product use, the way that you're looking at data, the way that customers are playing out? And what people are buying.
How can I say this without using profanity? So COVID, all right, COVID completely, all right, so everything with, if I were to do this whole thing on insurance, the underwriting and actuaries is like a dark art that I don't, like the models that go into that and the sort of the following of the trends and the user behaviors, there's all these things that go into it, even to the point of how much do you market your insurance will affect your premium, right? Because if you market it incredibly heavily, that means you're going to have a lot of claims. There's a whole series that go around that. And then there's the self-selection. You actually need people, a broad range of people who use the insurance so that not everyone's claiming at the same time. So it's kind of a giant problem with the U.S. healthcare system and insurance. People who need it will go get it, and then the people who don't need it don't go get it, really. And so then you have a high usage and you don't have sort of spread it over. And so the challenge from COVID's point of view is if we take travel, it's completely thrown up all the data into the air. And it was super cheap because no one used it. And everyone was like addicted to incredibly low premiums because no one used the service. And then you layer in the utter and total chaos of travel last summer. And so you went from nothing to incredibly high usage. And the question is, and so everything on like insurance is how predictable and how quickly can you understand the user behavior, the usage and everything to try to get it into the as efficient as possible program where you're paying just the right amount of money, right? You're paying enough premium where it's being used correctly, and the margins over time should on an insurance product always sort of level out. But COVID has really sort of thrown people into like a giant question mark of what is happening in certain pieces. And again, like from a purchase protection point of view, you're seeing probably more usage of that because people are out in the world using their stuff again. And so there's a whole series of pieces like that. So I think we're in this uncertain, for certain sort of, we do motor insurance, even in the motor insurance piece, like people are driving more again. So it was this kind of like this dip of usage and premium and claims, and then it was insanity last year, and now where are we going and what are we getting to? And so I think there's a bit of uncertainty, and some clients, they're like, but that's a like quote, it's 3 times more expensive than the premium I had during COVID. And I was like, yeah, because no one used your service. And so I think it's going to be a bit of a challenge. Any other questions? All right. We've got about 20 minutes left here. So, look, trying to get back into a bit of the flow here. Look, I think for us, again, coming back to how can you embed insurance into its place that it's useful and where it's going to go. I think again, one of the sort of the really sort of like interesting rates, and I've talked about this previously, but that sort of that 10% flow of like actually using insurance where we have a direct correlation to say that we increase the loyalty of our user bases by 10% with the place where you put the insurance into the program. Now, the most difficult thing around a lot of this is you're putting your brand against a piece of insurance, right? And that becomes a challenge of how you quote it, how you price it, how you position it, because everything comes down to quality. And in insurance, I always have the conversation, I want the best product in the market, but I don't want to pay for it. You know, and that becomes a really interesting piece, because if you're going to pin your brand against a piece of insurance, you need to be able to sort of position it and have it in a way that it's actually not doing a negative brand impact for you, because nothing's covered. People get really, really frustrated in the claims experience, and then you're sort of out of whack of where the market's going. I think for me, then the next sort of like interesting piece is, and this is going to be one of the largest challenges in the market for I think a lot of clients, is when to sell insurance. And that's incredible. I want to be over there. But anyway, the challenge is the further you get away from a point of a transaction, the harder it is to get someone to buy insurance for that transaction. I'll say it again. The further we get away, the harder it is to get there. The second piece is from a transactional point of view, when you're trying to do from your, let's say your financial services, I have all my transactions in my app, you don't actually know what was bought. I know they bought something from Sony, but who knows what they bought. And so to try to be able to try to get in at that secondary point, you really don't know what was there. And so the question then becomes, you have your embedded insurance, you get people interested, you're looking at it, but then your ability to actually get an attachment into a transactional relationship is a fairly difficult piece. So with our e-commerce clients, they come and obviously they tell us that they have X number of transactions and they believe they're going to have an attachment rate of X. I'll be surprised and excited the day we launch with a transactional program that just runs off and is super successful immediately. It's never gonna, not never, because I'll eat my hat and that will be a challenge, and I have someone from my team here, Lauren, will remind me constantly, and we videoed it, so it'll be in perpetuity, but it takes time and effort to market into that program, and to build up your attachment rate is something that always needs to take time, effort, and tweaking to really get it into the place that you want to get it into. And so this is one of these pieces that we spend a lot more time helping build it out and get it in the right flow, in the right spot to make it relevant. But for me, the biggest challenge and sometimes the hardest one to sort of deal with is this is not going to be an overnight success. The ways that we see, we've been in the market for 7 years, and we see a 2 to 3 year ramp to get into it. Now, if we're talking from a transactional program, the most interesting piece that you get into this is you have your users who buy their insurance the first year, and then you're able to renew them in year 2, 3, and 4. So what we start to see is in that renewal framework, you're probably around, if you're doing it well, you're an 80% renewal from all your contracts of year 1. And then your year 2, you start to actually see a higher transaction volume, but then you also have the backfill of all the renewals from year 1. And so it starts to crank up, and so into year 3, you may have 60% of year 1, you'll have 80% of year 2, and by then, your insurance has been there, they understand it, you've built the trust, you've tweaked it, you've figured it out, and then in year 3 is when you really start to see that compounding multiple, because you have 2 years of renewals, and then you really are starting to get into that probably 30, 40%, if you're really good, 60% of an attachment rate of your user base, and you see a very nice business model that generates a nice return. But the idea that you're just going to hit the market, and I really, we spent a lot of time and effort on this, it's not going to be a blowout success from the beginning. Because think about what most brands in the room do. Most brands don't sell insurance. And again, then because you're having to break that user behavior that they need to see that they can get insurance with a brand that they love for a while. And then it's going to be that when they go to then renew their policy, or they've had a bad claim experience with their broker, or something has happened, and then at that point in, that's when you start to see the uplift, because it's a challenge. And then the next piece is you're also dealing with like life events and moments and everything else. So you can launch a product, but we have a bike insurance product, and we have some of our partners are going to just roll it out to the whole user base. But how often is there one, we're dealing with a limited user base with a limited universe, and how often is their user base buying a bike? Right? But again, over time, I may go buy a bike in the next 2 years, and then I'll see, I can do it through my app. So I think that's a really sort of interesting challenge that we see in the market. Any questions why I have a sip of water? Yes.
Thank you. Thanks so much. I was just wondering what the consumer experience looks like. So if you purchase multiple small products that have insurance via your brand, firstly, how do you do the consolidation and aggregation on the back end? And secondly, in terms of renewal, what does that look like from the consumer's point of view? And is there a point at that point to say, look, you're already using us for X, Y, and Z, do you want to just roll over and we'll be your insurance provider?
Very good question. I didn't pay her to say that. That is the life cycle management is where this gets very complicated over multiple European markets. To be able to sort of pull that in, and so what we see a lot of clients, they start to build an insurance hub in their app, and you can start consolidating that in there, because some of them have multiple, and then how do you get where and where do you go and what you do, and it becomes like an overall challenge of how to keep those systems. Because I may have bought a bike insurance in November and then did, I don't know, home insurance in January. How do you keep that process? But I've moved, and so when I move, that means my bike insurance will probably get more expensive because I've gone from the suburbs of Barcelona into the center of Barcelona. So that means then I have to recalculate the premium. My home has changed. I have to recalculate the home or cancel it. All these things start to become very complex and very hard to manage and handle. But the more you get, the easier that weirdly becomes from let's say a financial services or a banking partner. But that's a very tough one to manage all those different pieces. All right. Anything else? All right. So look, I think for us, the real message and you take one thing away, please let it be this slide, because for us it's the two pieces that really matter in the process. It is the user needs. The user needs for me is if it's not relevant to the users and it doesn't matter, it doesn't work. But more importantly, if it does not meet your business objectives or it drives a behavior that helps your business, I would then really question, is it worth your time to launch an insurance product or an insurance program overall? Because if you can't make the business objective work, even if you have an incredible user need for it, that user need, if you've really nailed it, they're still going to go out to some broker, some comparison website, something else to go do it if it's not relevant to what your business needs. Because it needs to be very, very engaged, very together to help it work. And so, and then there's that constant sort of exploring. These things, they are not stagnant. They're not, you need to be tracking how many claims are you having? Like, do you need to do a marketing campaign to have them understand your benefits? Where are you going? What the direction to make sure all that works? But if you're able to do all that, we do see an incredible lift that makes it work. Where, you're able to really say, look, when I get those users, it's no longer the beautiful, and I'll say it, vanity metrics of growth, where you have all these users or they're doing this, but you're actually putting them into the bucket that they're actually making money for you. Because you spent all that time and effort getting them. And then what we spend our time on is making sure we don't screw it up, and we're able to provide a really good service overall that makes that retention matter. Because a lot of our clients and the people we talk to, they the only reason they know something's gone bad with their insurance program is they get a bad NPS score. And then they lose users, and they really track that sort of program and try their best to see where and how users are leaving them. And it's kind of a double-edged sword there, or two sides of the same coin. This is my last slide. I got one more that has our wonderful "We Got You Covered" piece. But any questions? We got 8 more minutes. Anything else from anyone in the room? All right, well, you've been a fantastic audience. I feel like I go into my stand-up routine now and tell a couple jokes. But I really appreciate it. Thanks for sticking around and spending time on Thursday at 12 o'clock. I appreciate everyone that is here and who has stayed. And thank you very much. It's been a pleasure.